Assalamu alaikum wa rahmatullah wa barakatuh. Welcome to another episode from Farhad Omar Studios, where we dig into current global trends and issues from a comprehensive perspective. I'm your host, Farhad Omar. Today we will explore the realm of global financial instruments and trade, specifically examining why certain forms of trading are not compatible with Islamic principles. The modern financial landscape is replete with complex instruments and speculative practices which, while potentially lucrative, often stand in stark contrast to the ethical and economic guidelines set forth by Islam. One prominent example of such practices is the carry trade. Now, this strategy involves borrowing money in a currency with a low interest rate and investing it in a currency with a higher interest rate. On the surface, this might seem like a straightforward and profitable venture. However, it inherently relies on the concept of interest or riba, which is explicitly prohibited in Islam. Islamic finance principles are built on the foundation of justice, fairness, and the prohibition of interest. The Quran and Hadith has made it very clear that any gain derived from lending money at interest is considered exploitative and unjust. A carry trade, by its very nature, seeks to profit from the differential in interest rates between currencies, thus directly violating the prohibition of riba. Furthermore, the carry trade introduces a significant level of speculation and uncertainty, or Gharar, into financial transactions. Speculation is akin to gambling, which is also forbidden in Islam. This speculative nature can lead to unpredictable and often destabilizing effects on global financial markets. We've witnessed this in various economic crises over the decades, where speculation and uncertainty have led to markets that crash, impacting the lives of millions worldwide. The ethical and moral dimensions of Islamic finance emphasize transparency, shared risk, and tangible economic activity. In contrast, the carry trade and similar speculative practices create a financial environment where profit is derived not from real economic activity, but from the inherent uncertainties and fluctuations in the market. Now, these leads to a fragile economic foundation prone to booms and busts, and fosters an environment where wealth is concentrated in the hands of a few who can navigate these speculative waters, often at the expense of the broader society. In Islamic finance, we promote instruments like mudaraba and musharaka, which are based on profit and loss sharing. These instruments ensure that all parties involved share the risks and rewards of an investment, fostering a more equitable and stable economic environment. Similarly, we have Islamic bonds called sukuk, are structured to provide returns based on actual economic assets and activities, aligning profits with real-world outcomes. By adhering to these principles, Islamic finance seeks to create a more just and stable economic system. It discourages the kind of speculative trading that leads to the prevalent chaos we see in global economic trends today. Instead, it advocates for financial practices that are rooted in ethical behavior, transparency, and mutual benefit. In conclusion, while global financial instruments like the carry trade might offer short-term gains, they come at a significant cost to ethical and stable economic practices. As Muslims, it is essential to be mindful of these principles and seek out investment opportunities that align with the tenets of our faith, promoting justice, equity, and real economic value. Thank you for joining me in this short episode. I'm Farhad Omar from Farhad Omar Studios. Until next time, I ask Allah to guide us. Wabillahi taufiq wal hidayah. Wassalamu alaikum wa rahmatullah wa barakatuh.